Hey everyone, this is Mikas coming at you with a new kind of video. This is going to be the first video of a toolbox series where I highlight certain strategies, indicators, or just other ideas that I've found useful and that I've added to my toolbox as a trader. And I find useful and I think are honestly worth sharing. So here we go. This first video is going to be on market sentiment. I think this is something that might sound very self-explanatory. A lot of new traders don't even know about. I think some mid-level traders maybe know about, but they kind of disregard. And something that experienced traders, I think, generally look at. Maybe it's not a guidebook. It's not going to tell you if the price is going to go one way or another, but it's a useful extra little resource to have just to as a second opinion, honestly. So for those of you that don't know, market sentiment is a way of conveying what the overall bias of the people trading a market is. So that's important because this gives you a look into the psychology of the market, essentially, or the people that are trading the market. So with that said, between different people, whales or market movers, I really want to highlight this. It's very simple, but the way that a whale makes a market move, or you see all these super volatile spikes or dips, is because of the sheer contracts that they pour or take out of the market. And the only way they can generate that sheer volume of contracts is through generating their own liquidity, because there's no way that an exchange could fill, like, let's say I have $1 million and I do 10x and I want to, okay, millions maybe exaggerated, but let's say I have $10,000, right? No, 100,000. I have $100,000. I 10x it for $1 million trade. That's pretty realistic. A lot of people have $100,000. A lot of people trade with $100,000. So they 10x it for $1 million. There's no way that an exchange can fill your $1 million contract the same way it fills anything like 1,000, 2,000, 3,000, 4,000, 5,000, whatever your average everyday trader might be trading. So in order to be able to fill their orders, market movers or whales generally have to generate their own liquidity. And the way that they generate their own liquidity is by playing on human psychology, right? So the way that this works is a whale is going to come out when you least expect it. And the important thing with saying that is if everyone is, if everyone's a moon boy, if everyone's bullish, everyone's like, oh, the price is going to skyrocket any day. We're going to go up. We're going to go up. And I mean, obviously there has to be TA, like there has to be technical analysis to back that up. Like fair, you're very fair in believing that. But at the same time, I love checking market sentiment to see what the other people are thinking. Because if everyone's bullish and everyone's putting in long orders and there's a nice juicy liquidity pool being built for a bear or something like that, then I hesitate, or I always wait for the confirmation of the trend. I know a lot of traders say, or these people that teach you how to trade are always saying, wait for a trend confirmation in order to like hop on it. But at the end of the day, if you want to catch a really good swing, you're gonna be leading into it a little bit. Anyway, that was a long ass intro. Let's get into actual market sentiment. I use DataMish. There's a bunch of websites that do the same thing. I just find this one the most intuitive, and I like it for this graph specifically. And I mean, I'll tell you right now, on a very oversimplified view, like very grotesquely oversimplified, is the higher that price action gets to this long green line here, the more likely it is for us to see a volatile move to the downside. And vice versa, the closer price action gets to this red line of shorts down here, the more likely it is we'll see a volatile push up. This goes for volatile pushes. This doesn't mean a change in price action or overall trend. This just means the closer you are to one of the regions, the more likely you're going to be seeing these market movers or whales coming out trying to make plays to generate their own orders. I mean, you can go further back, but just here on the 7-day, you can see when price action came up here to around 7,200, we were pushing this upper line, volatile drop, right? the closer we get, and eventually we got this huge doomsday drop here. Not doomsday drop, it wasn't that bad, but we got that like liquidity, and you can see as soon as we got closer to this bottom red line here, we were all of a sudden getting spikes up, spike up, spike up. So I'd say this is obviously another oversimplification, but if you divide this graph in half, being below it is it's a bearish control zone. So that means likely for bull market movers to come out. Whereas the top half is a bullish control zone, which means bear market movers are likely to come out with shorts. So going into this a little bit more detail, if you scroll down a little bit, you'll see the interest rates. And this is essentially what these lines are telling you, but pulled out and price actions taken away. This will just give you the overall amount of so as in like dollar or BTC amount that are submitted as longs or as shorts. So as we can see over here on the 20th, we had about 24K BTC put down for longs, another 24K. On the 20th, I mean, let's even like buy a token. Like we don't even have half on shorts. But the point is, this peak, that was what is this? Okay, let's have a look. When did this peak come in? 9:20 on the 20th. On the 20th at 9:20. Okay, so that was post dip. Okay, so yeah, we had this huge dip here, which could have very well have been I don't know, it could have been market manipulation, call it whatever you want. But we got a little bit of a correction to the upside. All the moon boys came out. This is what I'm saying. All the moon boys, all the FOMOers come out because they see an uptrend off of a price correction and they pour their money into it. They're like, oh, with prices going to the moon, get all your fucking Bitcoins in there. And that's where we see this first spike. Okay. As a trader, as a whale, there's an overall downtrend, right? We are going down. This is a simple correction. If I see 24K, so going from 23K, so about 1,000 Bitcoins, so that's, okay, multiply that by what, like 7K, $70,000, like that's pretty significant. Like as a whale, like I'm considering, like that's a substantial amount, even for my 100K, whatever wallet that I have. So as soon as that pumps, we see a huge drop, right? And then we get another pump in longs here a little bit to try and catch another uptrend. But they end up, I'll scroll down and I'll show you the liquidation amounts in a little bit. But before we get there, let me say by how this was working in the bears' favor and everyone that was long got liquidated, not everyone. Some people that were long got liquidated. By the same token, a lot of people were overbearingly short, and that's where we see this spike come in, right? This was, when do we see this? April 21st at like what, 1 in the morning? April 21st. Yeah, around 1 in the morning. At the same time, people are submitting shorts here because they think that price action is going to be falling down to like 6K. Like I was looking at all the TA, and then comes in this huge, like, I mean, even here, like, most people should have, like, set their stop losses. I don't know why, but, like, some people don't like setting stop losses, I guess. Or maybe they set it at 7K or something. But once again, if I'm a market mover and I see this huge increase in shorts from what it usually is around, I'm thinking, okay, that's a lot of Bitcoin. That's a lot of money that I can capitalize on, right? So, like, let me try and manipulate or something like that. So let's go down, look at the liquidations. I guess this is a decent to the 22nd. Yeah, I don't know. I don't use this one too much. I haven't looked into it too much. But this is what's interesting. So look at that. $110 million of longs were liquidated, whereas $74 million of shorts, which makes sense, right? Like that coincides kind of with like the difference in peaks that we have here. Like obviously there's going to be more long liquidations and stuff like that. But my main point here is whenever you're submitting a trade or whenever you think you're about to make a big swing move or anything like that, I recommend always coming in here and checking market sentiment, right? and the first thing that I look at is this general price graph, right? Are we close? Are we close to this green line? Then I'm generally going to be a little bit more bearish. Not saying this is going to impact my TA or anything like that, but I will have that extra seed of doubt in my head from being a full out bull. I will keep it in the back of my head. By the same token, the closer we are to this red line, in the back of my head, I'm thinking, okay, this is a prime setup for a price pump, right? But that's an overgeneralization, because you can have big price action inside and outside of these ranges without them moving much. The main thing that you want to be looking at is here, right? Is like, there's nothing wrong with having this amount of money in longs, but look at the time taken to reach that level. As you can see, we have a super steep slope. Like, this went up from being 23K at 420, 420 on 420, blaze it, sorry, 420 to about a K. So multiply that by whatever, $100,000 increase in 6 hours, right? Like, that's pretty intense. And by the same token here, we saw a huge increase really fast. So yeah, and then this is maybe for a different video, hedged versus unhedged, but that's kind of useful too, I guess. But most important thing is, have a look. What are most people like trying to do? Like, what are most people thinking? Obviously, use this in synergy with your own TA. Use it to support or not support your own market predictions. Have a look. Use these graphs mainly to see how much money is on either side of the table. If there's a lot of money on one side of the table, be cautious of a move to the downside or a very volatile drop. Same thing on the other side. If there's a lot of money here, be very cautious of a volatile pump. I'm not saying that this will necessarily change, trending price action as it did here, but take it into consideration when considering some stop losses or anything like that. Just be ready for a rocky ride if these things are looking like boulders or mountains. I guess that's the best way I can put it. Let me know if this helped. Let me know if you use this indicator and if you think I missed out on anything or anything like that. Thanks, guys.